Hey everyone, Nick Shaheen here looking at pot stocks. Again, Canopy growth CGC is the ticker. I did a video a few days ago when everybody was hating on it, and I said, well, there are reasons to expect some sort of a support zone. They announced earnings, and I think the day later or a couple of days after that, two other companies reported, which compiled the problem. So it fell on earnings from here to here and then continued lower twice on two different headlines. And then I did the video, and the video was very popular, got a lot of likes. There are a few that didn't like it. I don't know why, because I kind of called the bottom in it. So if you watch the video and you expected the support that I said might come because of the reasons I noted in the video, then you made a lot of money. How much money? Let me see here quickly. What is it? 50 a 50% bounce? Oh my gosh. Okay. So quite a bit of money. But, you know, these are small dollars but $6 on a 14 base is pretty good. What was the number that I mentioned? I think it was $14. And let me revisit why, okay? This is not to boast. This is to make another point. So this is a weekly chart of CGC, same company. Every candle is 1 week. And in the video, go watch it. I don't remember my exact words, but I do remember mentioning this. In 2016, that was an odd week, right? A lot of love and then completely gone. And then it took them a whole year to break out of it. And they had a good solid consolidation here. I mean, this looks like a few ticks, but it's actually almost a month. Everyone is a week. So, a mistake. They took a year to fix it. And then they broke through it, and then since then had been support. And then now they're falling back into it. So this is this. So the point is, when you fall back into a prior pivot, which had been pivot a few times, 1, 2 at least for sure, 3, this one in spirit, but you know it doesn't count as much because it's up here really. So it's not going to be butter. That's probably exactly what I said in the video. So what about now? Is it time to book? First of all, personally, anytime I get a rally, a 50% rally in anything I have, I book it. History tells me I'm not that lucky. So, other reasons why I would book it or spread it. So, for example, what does that mean? If I bought calls, they're hugely profitable now. If the stock rallies a little bit, the calls rally a lot of bit, like thousands of times. So if somebody's lucky enough to have calls, let's say I bought the $20 call, I can probably now sell the $30 call of the same period and collect more than what I paid for mine. So in essence, I'd be long. I got paid to be long. So locking in profits. That's one way of doing it. Or I can just sell them and rebuy them. So why would I be the seller and then rebuy? Because of the same reason I said before, the same reason that was bullish or expecting support. It wasn't really bullish. I was expecting support. I would expect resistance. So this is a ledge, right? They made a stance, support, boom. They tried to make a stance, it wasn't. They fell. And in fact, it has now been resistance. So I expect resistance once they get there. Moreover, there's another ledge right here, and they're almost on it right now. So specifically, if I wanted a trigger to go long, if I'm not long yet and I'm debating to go long, which is a crazy idea at this point, I would at least need to see a break of this little guy, or a break of this, or a break of that. And by a break, I mean up and then a close above it. So how do breakouts happen? If this was resistance, and these are the bulls, they hit it, they go like this, they try to hit it again, let's say they go above it, and then they should hit it here to make sure it's support so they can build on it. And if you look at this, what does this look like? That's how inverse head and shoulders form. They hit the neckline, they fail. They hit the neckline, they fail a lot worse. They hit the neckline, they fail not as much. They hit the neckline, and now they have an upside down head and shoulders, which is bullish. So if they're able to do this, then they overshoot and rally about this much, in theory, which will bring us to the next level, right? So the good news is that they erased the fundamental drop on earnings. So they said, you know what, that message in the earnings, we believe the CEO, whatever, or actually acting CEO, there's not even a CEO. This may be the next catalyst. They announce a CEO, and then that just gives it another leg. I'm not saying to short it here. I'm saying if I just had a stock, if I was long a stock that just rallied 50% in 3 days, I'm booking that bad boy. Or I'm hedging my bet somehow. Or I'm getting my money out, so I'm playing with house money. So the same reason that told me expect support, I think we should have some resistance here. That alone is not reason to short it. That alone is not reason to short it. But that alone is reason for me to trim my profits, to hedge my bet, to not start long until I see this. So that's the message of this video. This video is going to be a lot shorter than the other one, but the same point applies. If I'm not using charts, I'm missing so much, so much. If you don't believe me, the charts tell a lot. So here's the SPY. I track it for members. So these are lines that I drew for us to guide me and whoever's reading my notes through the next few days. They end here because I probably drew them somewhere before that, and I extend them a little bit forward. So to me, this was a meaningful line, this was a meaningful line, this was a meaningful line for several reasons, and this was a meaningful line. So here's what happened. This is what unfolded since I drew that. Look at this bounce, happened exactly at my line, and then they lost it on silly headlines from yesterday. And then they came back to exactly the same line before they faded, and now they're coming back to the same line. So, looks familiar to CGC? This is a completely different chart. This is an ETF for 500 companies. The chart is the chart. So let's examine another line in there. So what about this little candle? This one right there. So if I'm going to zoom in on it, look at this little candle right here is exactly this blue line right here. And it repeats. So what about this little candle? I mean, this line right here is exactly this bottom. So they overshot on the headline, but this is really where they meant to stop, because the next time they came back to it, they stopped ahead of it, exactly where they should have based on prior history. Because of this cluster, this top, this is how I come up with my lines. I don't just pick them out of the blue. This one was a top here, which happened to be my extension of the high, which, you know, we had a huge gap. We filled the gap. And this is just a SPY. So fundamental traders, I'm a fundamental trader. I don't do anything without looking at charts. Absolutely nothing, because you could have the best thesis in the world. If you're buying something going into a pivot point like this one, it's not an obvious point of entry, even though my thesis is above it. So unless my timeline is really long, then I should hold off. So you think this is my opinion. So this is AMD. Champion stock. Really champion. I mean, I thought it was going to break out here to get to here. It did it, but after a couple of tries, and it came to exactly where I said, a little bit more. And this is not the first time. I don't predict the direction, but I can tell you once it breaks a line where I think it's going. Like here, I said there is a 2-scenario setup. If this one happens, we're going to test this zone. If not, this zone. So the point of this AMD stuff, the pros out there in Wall Street are watching the charts, okay? So this is a daily chart for 1 year. This is a weekly chart for 5 years. You think, oh my gosh, this thing is never going to come down. You say, this has never happened before. I challenge you. I bet you the guy that downgraded it this morning, or the person, I don't know if it's a guy or a girl, was looking at this. So this is a monthly chart. This is AMD back to 1999 and before. Okay, so it's done this before. And look at this level right here. The person that looks at the chart and doesn't say book your profits in AMD up here and still says buy AMD up here is really gambling with other people's money. Really? This is and this is not the first time it's happened. This is the dot-com bubble, and it's still lower than the dot-com bubble level. So it's not an all-time high for AMD. Mind you, this is a different company now, but a chart is a chart. So it did this rally and fell apart, like 95%. 95%. Here it is. I'm not saying it's going down by 95%, but I'm saying there are better entry points in AMD, and this is why the person downgraded it this morning. They're not dissing the company. They're probably thinking, I didn't read the note, but it probably says something along the lines, too much too fast, which really means it's not an obvious point of entry. It would be somewhere around 34, a better point of entry. Next level down would be 30-ish, and 27.5. We're just backtracking. So how did I trade AMD? Okay, so on the day everybody hated it, after the earnings I think it was, I sold puts when everybody was afraid of it at 26 for December. Collected money, I think it was 1.1, and then when the fears abated, bought them back for pennies. So I didn't bank on a rally. I bet against the fears. So when everybody's afraid of it, illogically afraid of it, then this is the time to pounce. But to buy it up here is really taking a big leap of faith. I understand Lisa Su's a genius and she's going to do fantastic things, but downgrading it here is not insane. I'm not saying short it up here. This is what I call THDH. It's too high to chase at this point after this rally and too hot to short. It's okay to say I missed it. Let me find a better entry point. Looking at this, a better entry point would be here. 30. First of all, this cluster right here would be good, and this cluster right here would be good. This was a pivot point, that white line. So let's extend the white line over here. 34 to round the numbers, okay? If it gets below 35-ish, the sellers will start to get into control on a daily basis. Now, if somebody's faster trading, they'll probably use something like a 15-minute chart, which has a whole bunch more information, but useless to somebody who's doing it long term. Here I can see that 38 is a pivot point of sorts, and the zone between 36.5 and 37 is. And according to the math, this is the point of control where most of the action happened, believe it or not. So it's falling into a support zone on a short-term basis. You know, if somebody's really fast, then they're trading on a 5-minute chart, but I can't imagine a lot of people want to do that. So here's a 2-hour chart that shows the extension. So if I just catch the rally, the volume from the rally tells me that most of the action was here, 36 and change. So wouldn't it make sense for me to try to buy it at the 36 and change? And if you believe in Fibonacci, I did not do this ahead of time, so let's see how accurate the dude is. So what did I say? 36 and change. The 50% retracement of this rally. Did I catch all of it? Let me delete that and do it from here. So really, this is where the rally started. So the 50% retracement is somewhere around here, which is pretty close to the point of control. So wouldn't it make sense for me to let them take back half the rally-ish, fall into support for this period of time, and then buy it long, even if I disagree with whoever downgraded it. But anyway, so I meant to do a short CGC, and now we did the SPY and we did the AMD. If you don't already subscribe to the YouTube channel, hit the button on the top left. And also there's a free pass to the chat room. Give it a go.